Welcome to today's episode. We're diving into the intriguing world of Covenant-Lite loans. Have you heard much about these?
Definitely. They're quite the buzz in the finance world. Covenant-Lite loans are essentially loans with fewer restrictions compared to traditional loans. It's interesting how they change the dynamics between borrowers and lenders.
That's right. Typically, traditional loans have covenants that protect lenders by setting certain financial criteria borrowers must meet. Covenant-Lite loans, however, reduce these protective measures. Why do you think borrowers prefer them?
Well, for borrowers, it's mainly about flexibility. These loans allow them more freedom to operate without worrying about breaching strict covenants. Especially in volatile markets, this can be a significant advantage.
But wouldn't that mean higher risks for lenders? Less control over the borrower's financial action seems like a gamble.
Absolutely. It does increase the risk. Lenders might not have early warning signs of financial distress, which could lead to bigger issues if the borrower struggles. Yet these loans are often tied to attractive interest rates, making them appealing despite the risks.
Speaking of risks, how do you think the rise of Covenant-Lite loans reflects on the current lending environment?
It's a fascinating shift. It indicates a more competitive lending market where borrowers have more bargaining power. Lenders are willing to take on greater risk to capture business, especially when dealing with large corporations with substantial leverage.
That's a good point. It seems like the financial world is seeing a balance between risk and reward. However, could this lead to potential systemic risks down the line?
There are concerns. If too many Covenant-Lite loans default, it could shake the financial stability. But for now, it appears manageable, provided the economy remains stable and growth continues.
Let's hope it stays that way. With fewer covenants, I imagine it changes how investors view these loans. How does it impact their decision-making?
Investors have to be more vigilant. They rely heavily on credit ratings and other assessments since they can't depend on covenants for security. It's a challenging landscape, but also an opportunity for savvy investors.
Definitely a double-edged sword. Before we wrap up, what's your take on the future of Covenant-Lite loans?
I think they'll continue to be popular, especially in bullish markets. Lenders are likely to keep offering them, driven by demand from borrowers who want flexibility. But careful monitoring is crucial to prevent potential fallout.
Agreed. It's a trend worth watching closely. Thanks for the insightful discussion. That's a wrap for today's episode. See you next time.